Hey everyone, today we're going to be talking about Airbnb's earnings report where they go over their Q4 and 2022. In this video, I'm just going to go through some of the statistics from their report. I'll give my thoughts on it. I'll also summarize some of the context that they provided in their earnings call, which I also listened to before jumping into the stock price, the stock reaction today, as well as what I did with my shares. Did I buy more? Did I sell? We'll talk about that at the end of the video. But I just want to start off with the top line revenue that you're seeing on the screen here. So focusing in on the total fiscal, we really saw incredible revenue growth this year, 40% in constant currency, 46% if we back out foreign exchange. And we saw profitability grow 10% over revenue growth in terms of free cash flow, which is fantastic to see. Really starting to see the scalability of this business, and we'll talk about that a bit more in their operation. But generally, really good top line growth and just consumer traction for Airbnb in both Q4 and in 2022 holistically. Going into their profitability, so you can kind of see Q4 historically has not been a great quarter for them. Less people traveling, colder out, stuff like that. But typically, they've been improving year over year. Typically, they were losing money back in 2019, even before the pandemic, in Q4. And in 2021, they turned that into essentially break even on net income. And then this year, it just exploded forward to 17% margins, up to $300 million in net income, which is great to see that we now don't have a bleeding quarter. And no matter what the environment is in terms of time of year, this company has scaled up enough that the operations can support its fixed cost structure. So that's definitely a positive sign, one that we were expecting, but maybe not in this big of a way in terms of investor sentiment around the company and how they would deliver their Q4. We're seeing adjusted EBITDA really follow the same trend as net income, which isn't surprising in light of no big one-time events that would drive a big difference between these two. But overall, just really good to see really fundamental changes from year to year on profitability. So I know we're skipping 2020 in here, but this company was burning a huge percentage of its revenue in terms of the bottom line in 2019, just a few years ago. In 2021, got that to essentially break even. And in this year, really in 1 year, delivered really respectable margins behind it. So on the right glide path, showing really strong scalability metrics in terms of the amount of fixed costs on the business. And I think they're really poised for future growth here, which was great to see this big of a step in 1 year. Going into some of their performance metrics just on their business in terms of nights and experiences and gross booking value. Starting on nights and experience, we really see 2019 to 2021 a really big catch-up year, essentially, from the amount of nights and experiences booked and then getting back to normal in 2021. But then in 2022, we saw a huge jump. You can kind of see the year-over-year growth rates here, even over 21, which was a pretty strong year backing out of 2020. We saw anywhere between 20 and 60% growth. I guess the 20 to 25 was more normalized, but that really shows the organic secular trajectory of the business as more people are traveling, more people are working remotely, and the new generation are more and more looking to Airbnb as an option for their stays. Experiences is still a small part of the pie, but in the call even they were referring to that being an increasingly large focus area to work on how they can expand experiences in years to come. Whether that's partnering with tour companies or whatever it may be, I think that as they take a bigger and bigger bite out of the travel market in terms of where consumers are going to book their stays, lots of experience providers will flock to the platform in one way or another in order to be where the consumers are. So I think they have a lot of untapped potential there. Another area I just want to hone in on is gross booking value. So you see in 2019, depending on the time of year, anywhere between $110 to $120 per night was the GBV. In 2021, that grew about 20% to 150 to 160. And then we see in 2022 flat in Q4, but some modest growth throughout the year. So I think that 150, 160 is a really healthy rate. And it really depends on their mix. Is it more, bigger houses, larger platform stays that they're offering, or is it small condos in New York, whatever it may be, can impact their GBV. But overall, I'd say pretty healthy, and they're rolling out more and more tools to make sure people are pricing accordingly, which is just healthy for the overall ecosystem that they're providing to consumers. Overall, if we just look over a short period of time, we're seeing a fundamental different business in 22 versus 2019, which is just 3 years. And it's not like Airbnb wasn't a big business 3 years ago. So it really goes to show how well they've grown this business from, let's call it, I'm just doing some quick math here, like 230 million nights and experiences to probably closer to 400 million nights and experiences in 2022. Gross booking values per night or experience went up from $115 to $160. So there's a much larger, more profitable, and a lot more pricing power on this business that they're able to provide hosts with a much better platform to earn an income and earn a subsidiary income off of, while providing guests with more optionality and opportunities to book stays on. So great results in here in terms of the key performance indicators of the business. This is just a summary. I don't know why I was doing the math off the top of my head. I have it on this slide. So you can kind of see gross booking values from 21 to 22 up $2.5 billion. Pretty strong there. In terms of on the full year, up 15 to $16 billion. Nights and experiences up 100 million, from 300 to 400 million essentially in 1 year. So this is fantastic. In 21, there wasn't too much pandemic impact, and to grow at this clip, really impressive on the business. Some things that they talked about in the call that I just wanted to allude to as well is some other growth areas that the business has that they've just been tapping into. The first one is launching in rental. So they've been working with large national REITs, just a couple of them currently, on managing their subleasing by letting tenants sublease on Airbnb and fill that space when they're not there, only up to a third or up to half the year, to enable their tenants to sublease effectively, for the landlords to know more about who they're renting to. And in addition, whereas subleasing in the past has been something that has been no gain for the landlord, Airbnb actually kicks back a percentage of their take rate to the landlord. So they're making this into a profit center. It's putting more money in the tenants' pockets as well when they don't need their apartments that they're renting. So it's really a win-win-win. And they said they've been seeing really early success, and they expect this to grow into a much bigger platform and a much bigger business than it is today. This is completely incremental to, the travel space, as this is more longer term stays in urban cities, not really vacation oriented. So this is a really interesting growth area. I don't think it's going to become a big part of the business, but it just goes to show the value that Airbnb can bring different sectors of the economy, and they can extract more and more revenue going through their system, take a take rate on it, and accelerate revenue in different ways, not just riding the organic secular trends of travel on peer-to-peer platforms. On the consumer side, one thing that I think is another opportunity for further growth is offering services to people. That's 400 million stays in the year. And on lots of those stays, tons of people are buying things like travel insurance or airfare or whatever it may be on their own. And as Airbnb integrates some of those offerings on their website and gets either kickbacks or at some point owns products and services themselves, it's a huge opportunity to take a larger bite out of the travel industry. So late last year, they partnered with a travel insurer on their platform in, I think they said it was 8 countries on their call. and they've received really strong traction, really good results on it. They're looking at expanding that into more countries. And I think as they move into bigger and bigger markets with that, that can be a really big source of either kickback income for Airbnb and just show how much they can really expand the size of the pie that they're taking a take rate from or getting kickbacks from. So right now they're just taking, 15% give or take of stays, but there's a lot of other opportunities in travel for them to go after, from experiences to rental to insurance, like you're seeing on the screen, to potentially booking airfare and other things that they're currently not in. I think as they run out of growth trajectory, which won't happen for a while, they can really expand in a lot of different ways. And there's a lot of incremental revenue opportunities that they're really not going after today because they've been so focused. Looking at their P&L here, so you can see really strong growth, 6 billion to 8.4 billion on the top line. But what's really interesting here is you look at that growth being essentially, let's call it 30%, but the cost of revenue hasn't gone up 30% quite. You look at some of their other costs, like product development is essentially flat. Operations and support is up significantly less than revenue. So they're deriving a lot of scalability and operating leverage off of their existing operations. They're not hiring in a big way. One soundbite they mentioned multiple times on the call is their headcount's actually 5% lower than 2019 with revenue 75% higher. That's really refreshing to hear, especially when you tune into earnings call for, Google, Amazon, Facebook, where their headcount's grown at a multiple of revenue over the past 3 years. Airbnb has been really tactical on where they add headcount and how they manage the business. Something that Brian Chesky said on the call was lots of companies are trying to build an army. We're trying to build kind of like the Navy SEALs, where we're a lot slimmer and a lot more skilled and more mobile and nimble. So I really like that analogy that he spit out there. And we're really seeing that come across in the numbers in terms of the productivity and efficiency of their workforce. Obviously, when you're doing higher revenue and you have operating leverage with your costs, you're going to spit out significantly more income from operations. So almost $2 billion of income on $8.5 billion of sales. That's like a 5x, 4 to 5x where they were last year, which derived in about $3, $2.75 to $3 of EPS. So really strong year, especially given this was their first year of really sound, solid profitability on the bottom line. They didn't just get there in a small way. They delivered a real strong EPS number of billions of dollars in year one of profitability, which I was really impressed with this year for Airbnb. Just taking a quick peek at their balance sheet too. Their balance sheet, despite buying back shares to offset share dilution, which I love to see, their balance sheet also increased. So total assets from, call it 14 to 16 billion, cash on hand up over $1 billion, total liability up about $1 billion and a half, mostly driven by looks like total current liabilities up that $1.5 billion, but their total assets are up by $2.5 billion. So net, they have a better balance sheet now than they had last year, and this $10 billion in terms of absolute liability, given their current cash flows of $3.5 billion on the year, I think it was. Not too concerned about that. I'd say they're in a pretty good spot from a balance sheet perspective. So let's take a look at their stock, because while the business has performed really well, the stock price is priced very high relative to their earnings numbers. So today the stock jumped about 15%. It's at $137. So I'll start with what I did today. I actually sold my Airbnb position, was really impressed by the earnings, but at the end of the day, this company has a high side EPS forecast by analysts next year of up to $4. If I just look at their share price, that means that in a bull case, they're going to be trading at 35 times forward earnings. I love the company. I think the results are fantastic, But in this environment, there's so many names that I like that are trading at 10 to 20 times, 10 to 15 times even. And if I can sell a company that's not paying a dividend for 35 times and funnel that into some of my businesses that are trading for 10 to 15 times with a 5% dividend, I'm going to get paid in the meantime to invest in other opportunities. I'm allowing them to buy back shares at a lower rate. So I'm really bullish on the future of Airbnb, but given the current interest rate environment and other opportunities, I just felt like this was a good time to sell out given I had a relatively small position and I wasn't interested in adding more at over a 30x forward-looking multiple. So that's what I did on the stock. With that being said, I think this is a great business. If you have a very long-term time horizon and you kind of want to have blinders on in terms of opportunity costs or just focus on this travel play, I think Airbnb will do well long-term. I'd love to nibble back into the stock if it drops down to a more reasonable valuation, hopefully below 30 times. But for today, given buying this stock 3-4 months ago, having an average buy price of it in the mid 90s ish, I just took the quick 40+% return and looking to reinvest it in lower multiple stocks for the time being and deriving compounding dividend income off of that. Who knows? Maybe if this stock goes down 20% in the next few months, I'll take some of that dividend stock, start averaging back in. But for now, the value equation in the short to medium term just didn't make sense. It kills me a bit because I love the business. You can tell by me talking the numbers that I liked it. But I just think the valuation for the current market climate has gotten a bit higher than I'm willing to hold on to the company for, especially given this was a relatively small position. So was hoping to average into it more, not really interested in buying more at these prices. So that's my thoughts on the company. With that being said, would love to hear your thoughts if anyone else owns Airbnb. Any thoughts on the earnings and any thoughts on the stocks, leave them in the comments below. Would love to hear your opinions. And thanks for tuning into this one. I'll see you in the next one.